This is real. The rebound is real in the Chinese data, then, you suggest. The rotation back into value and cyclicals, Alan, how real is that? How much is done? How much still to come?
Well, it was real in November, yeah, pretty dramatic after a very long period of underperformance of cyclical type stocks. For us, the rotation has legs. Why? Well, when you have a cyclical recovery, like we're seeing in China, like what we expect in, if you like, the G7, then that is the time to be in cyclically orientated stocks. 1, 2, the valuation, and 3, what I'm seeing from performance and flows is that very few active managers are overweight these areas. So there's a chance for these cyclical stocks to really work. And yes, they tend to be shorter term cash flows compared to long duration tech, but there's a price for everything, and these short term cash flows can come back with a bang.
I just want to point out to viewers, we're still waiting for an opening price on UniCredit. We've been covering this story around UniCredit and the change of CEO there, the architect of the bank's turnaround plan over the last 4 years, now set to depart the business. We'll certainly bring you an opening share price on that, and maybe we'll talk about banks when we get that, Alan. Let me ask you, though, as we're talking about value and moving into value, what is the time frame around that trade? Because I'm reminded that we were talking about a time for value even before the pandemic. Then the pandemic meant that all of that got put on hold. Now we're back to talking about it again. So is this something you trade through the vaccine delivery phase, or is this something that has legs for many years?
Not likely legs for many years. You typically see a year or so of very sharp outperformance, and you're right. The pandemic, one of the side effects of the pandemic is to focus on longer duration cash flows, whether that be bonds or quality or technology orientated stocks. So no, it's a relatively short-term play, maybe only 3 to 6 months even, but it can be quite violent, as we saw in November. So it's something to position the portfolio for 6 months or so. But you know, we will still have a core, an allocation to quality type equities, because this is what you want to own in the long run. So more reliable, consistent earnings delivery in the long run. But just for the next 6 months, 6 to 9 months, you could see real outperformance by so-called value or cyclical stocks.